Yes, I hope you're fine. This is Prime FX bringing you some of the tutorials on Forex trading. At this moment, I would like us to look at how should you trade or how does a trader decide when to buy or when to sell. Basically, there are two schools of thought in Forex trading. One is those people who believe that the movement in the markets depend on the news or what we refer to as fundamentals. For that case, we should look at what we refer to as the Forex calendar. As you can see, we have what we refer to as the economic calendar, and it is usually given by several sites. You can see this is DailyFX, there is investing.com, there is FX Trade, there is another one that we refer to as you can Bloomberg. We have the one given by the Baby Pips, and there is still another one given by the Forex Factory. That is fundamental analysts or fundamental analysis, whereby market moves as a result of news. And when news happens, you will see a very huge candlestick movement. Mostly candlesticks like this one, I'm not very sure because I have not selected the date. Let me highlight a candlestick that can depict uh, such a big move. I was giving an example of such a candlestick, which there is that huge candlestick. Most likely, such a move is due to news released. We shall be coming to that after a short while. The second school of thought is the technical analysis, meaning you use things which we refer to as indicators to determine the movement of price. A good example is what I have posted on my chart there. The indicator there is known as the Ichimoku indicator, whereby you look at these lines as they change position. You can see at this point the price at this, let me highlight it. The price after this point, you find that the price moved up. Therefore, someone who was using this indicator, there are ways that they check and determine whether the price will move up or down. There are other indicators. If I can delete this one, and I have another indicator by selecting that. We have other indicators like the moving averages, the Bollinger Bands. Let's have that. You can see there are those lines. This is an object. Let me delete it first of all. You can see a very clear pattern here, a certain pattern. When this price hit the upper line, which we refer to as the upper band of the Bollinger Band, the prices moved down. On the other hand, when the price hit this point, you find that the price moved up. When you look at this is another scenario, the price hit that point and it moved down. The price at this point to hit that lower band or the lower Bollinger Band and it moved up. This is what we refer to as technical analysis. We use indicators and we have several of them as I will show you. We have the indicators there by under the icon of insert. You have accelerator, oscillator, we have all these, but indicators are divided or categorized into different concepts. There are those which show the trend, whether the trend is up or down. There are others who those are trend indicators. There are others which we refer to as oscillators, and their work is to fine-tune the decision that you had made when you are looking at the trade indicator. Mostly, apart from one of the indicators here that we refer to as MACD, the rest of the indicators are not standalone indicators, meaning you should use them in conjunction with a trade indicator. For instance, what I have posted on my chart here is what we refer to as Bollinger Bands. The oscillator, there is a certain oscillator that rhymes very well with Bollinger Bands. We shall come to learn this at a later topic, at a later date, which we refer to as the relative strength index, and that is the default setting. We shall be looking at this. When the prices for the oscillator moves beyond 70, you will find that we shall say that that asset is overbought. When it goes below or it touches 30, we shall be saying it is oversold. Therefore, there is a very high likelihood that the price will change direction and move up. As you can see, it happens at this point. At this point, oversold up here, that one, therefore the price moved down. That is technical analysis. But for this lesson today, I want us to dwell so much on what we refer to as fundamental analysis and how to make a decision on the same. The calendar that I like using, or the economic calendar that I like using, is the one for the Forex Factory. Therefore, on my search bar, I will write Forex Factory, and then I search. Forex Factory, you can see there is a calendar part here. Let's see what it shall give so that I can explain on how to make decisions based on the economic news, or what we refer to as fundamentals. Yeah, I have the chart here. This chart, as you can see up here, it is written this week, and this week it is from 12th, that is I hope yesterday, because today is 13th, to 18th. Therefore, Sunday 12th, Monday that way, moving down all the way. There is something that you can clearly see. There are some kind of envelopes here, if I can call them that way. These envelopes have different colors. And when I come down to this point, I hope that key is there. Let me look for it. So even if it is not there, yeah, this is what I want us to look at. You can see the term rigid. We have the envelope, I'm calling it the envelope, with color red. It means this is high impact expected, meaning the news that is released at that given moment will have a very big impact on the currency given there. For this other color, we have medium impact expected, and we have, I hope this is the yellow color, low impact expected. Generally, for the people who trade fundamentals or news, will most likely trade the high impact news. For instance, in this case, let's come back to our calendar for this week. Yesterday, there were no news major news that were being released, or high impact news that were released. You can see the yellow, the yellow, the yellow, low, medium to low impact expected on the currency. But when we come to Tuesday, at this time, when you open the chart in your country, depending on the time frame or where you are, you shall see at what time the news will be released. You have this news for my time, it is 10 a.m. GBP, and that is the currency being affected, and this is claimant account change. Now, what you need to do, you should come and highlight this news to know what will happen when something happens. There are three things that you get from that. You will see the actual, you will see the forecast, and you shall see the previous. This previous is what was given in the previous release. For instance, if it is MOM, that is month over month, this one in news was given last month. What they expected for this month, it is written here, and when now the news is released, you will find it at this point. How will the change affect the currency? How to know? You simply come here and you read the specifications here. There is this part. I want to highlight it. Hope it is clear that actual less than forecast is good for the currency. Actual less than the forecast is good for the currency. Let's look at this news that was released on October 24th, 2023. The previous was negative 9.0 thousands. I hope that came in as a thousand. The forecast was 2.3, but the actual was 20.4. It means this value, the actual one, is higher than the previous, and equally it is higher than the forecast. In case you go and trace that candlestick or on the chart, you will find that there was a massive movement, and the GBP in this case lost a lot, because actual less than forecast is good for the currency, meaning actual higher than the forecast is bad for the currency. Number two, you will manage to get this very important aspect, the frequency of release, and this one you can have it on your diary. This news is released monthly, about 16 days after the month ends. Then you will get when the next release will be, and some other notes given there. Therefore, when you are a fundamental analyst, you have to keep a close eye to the news, and that is how you should do the trading on. Let me get something else here. Another one, this is core CPI, or what we refer to as consumer price index. It is equally released today. For my time frame, it is at 4:30 p.m. You don't have to cram all these things. What you need to do is just come to the Forex or the economic calendar. You click on this part to open details. The first thing that you should check is how will the currency be affected by either a higher value or a lower value as compared to the forecast. When you look at this, what does this measure? CPI, change in the price of goods and services purchased by consumers, excluding food and energy. What is the effect? Actual greater than forecast is good for the currency. What is the frequency? Released monthly, about 16 days after the month ends. Actual greater than forecast, good for the currency. Forecast, I want us to look at this point, this one, the second one, that one that was released on September 13th, 2023. You will find that the forecast was 0.2 and the actual is 0.3, meaning that was good for the US dollar. When you come to the July 12th, 2023, you will find that the forecast was 0.3, but the actual was 0.2%. Actually, it has been highlighted using red to mean that one was bad for the currency. Green, good for the currency. What I would urge traders is that you do not have to cram all this. All that you need to do, for instance, if you cannot manage the whole week, the whole week data, you can be doing it on a daily basis. That is, the news that is expected to be given tomorrow, you look at them today and then you put it in your diary, because when high impact news is expected, you will find there will be a very huge movement on the currency pair. And basically, that is how you should trade news. The other news which are highlighted by either yellow, they do not have a great impact, or even, is this orange? They do not have great impact on the currencies. Therefore, they are not usually traded. Something else, before I close this tutorial, there is something else I would like us to highlight here, which perhaps I never mentioned. There is the forecast and then there is actual. For this one, the forecast is 210. This one, the actual is 188, lower than the forecast, and actual less than the forecast is good for the currency. Something else you need to note is that by how much is the change? By how much is the change? The difference between the forecast here and the actual is just 1. That is 1K, 1,000. When you come to this case, for the second one here, you will find that it is 7. When you come to the other one here on October 19, 2023, you find how many units? I hope 12 units. Meaning what? The one that has 12, a change of 12, will have a bigger impact than the one had for 7 and the one that had for just 1. Actually, you can see they have even the person who was highlighting this, it showed as if 218 and 217 was almost the same thing, because the change in this case was very, very small. Therefore, two things to check when you are checking on the economic calendar as I conclude is: one, is the change bigger than the forecast or lower than the forecast? Number two, by how much? The bigger the change, the bigger the impact on the on the currency.